Welcome to another riveting edition, live edition of Risk and Return. I'm Charlie Gasparino with my partner in crime, Bob Sloan, to unpack everything from the economy to tariffs to AI to you name it. We're going to cover it today. It's a special Thanksgiving Day episode that we're going to it'll be interesting because like after Thanksgiving, it's like you almost then it's like a mad dash to the end of the year. Markets are still going pretty strong, Bob.
Very.
People forget that Liberation Day, all those tariffs that Trump threw on it, we had this massive sell-off. Markets went nuts. Trump backed off most of his tariffs, but not all of them, and I think they're still haunting the economy right now. But we can get into that later. You have some fascinating stuff that you're indulging in, and you're going to indulge our audience in. Why don't we go through what happened last week? We had a global equity sell-off. Tech and AI still led, even though Nvidia beat earnings. What the hell happened?
Well, that's a really good place to start this show because we talked about Nvidia so much last week, and there was so much focus.
Until we were blue in the face.
Well, maybe not blue enough, right? Because
good point.
What happened this week is that Nvidia is no longer the dictator of the stock market. It's not. It used to be, I think, until last week. You knew the direction of the market if you knew what Nvidia was going to do. It was the dictator of the markets. Google comes out with a competing chip, and what happens? Correlations have broken down. And that's a seminal event because the market leadership has changed. And what you've seen is a handoff from Nvidia-dominated ecosystem to a Google-dominated ecosystem. Nvidia is down about 15% in the last, call it, month. It's given basically everything it made in October, it's given back. And we talked a lot about watch the correlations to the index, what happens. And you know what happened? Nvidia sold off. Every guy on TV was saying this is 1929. And guess what happened? The market rallied. The market rallied. AI stock rallied.
You never said. By the way, we laughed at that one guy.
We laughed it off. That's why I'm saying it. That's why I'm saying what we're saying right now, Charlie, because there was so much like, oh, if Nvidia falls 15%, the world's going to come to an end. Guess what happened? Nvidia fell 15%, and the rest of the index took off. Now,
people bought Google.
Because they bought Google because it came out with a competing chip. And so you're seeing that, hey, you know what? It's good for the market to have breath. Now, I was watching. I love following Dan Loeb. He's so great. He's got great, pithy, to the point.
He's so smart, and he's so like biting when he wants to.
Biting, right? But he reposted a chart posted by Philippe Lafont, who runs Cotu, is probably the biggest technology investor in the world. I mean, I don't think that's much of an exaggeration. And he said, look, Google ecosystem high, Nvidia ecosystem low, those lines are going to cross. So in other words, you're going to see Google dip and Nvidia rally. That's the way he's looking at the world, and that's what he's betting. So I thought it was a fascinating week for Nvidia and the doom that people were predicting if Nvidia actually missed earnings. In fact, they beat but missed. Because what we talked about was how would hedges stop working? Well, one of the things was if there's a competitor. Now, here's the interesting thing. If you look at our short interest for Nvidia, you would see that it's actually not really going anywhere. And why is that? Because our thesis is correct. Usually you see when the markets fall like this, you'll see some short covering, right? Maybe there's some profit taking. People are riding these hedges down. There's not an increase in short interest. It's about the same, at least in terms of number of shares. The notional amount is obviously less, but the number of shares is more or less the same. So the hedges are in the money, and people are now making money on both sides, right? If you were long Google, short Nvidia, or long those ecosystems, long Google ecosystem, short Nvidia, you made a lot of money. You made a ton of money. And now if you said, yeah, Nvidia was the whole market, we're going to short it to get the whole market exposure through one stock, you're going to keep those hedges on because they're in the money. So it's a fascinating thing. People are riding these hedges down, making money, and yet it's not really because people hate Nvidia. No one's shorting it because they hate the stock. Not at all. So our thesis that we talked about last week, that we got almost 160,000 views and about 70,000 people listening to this podcast. We would invite the viewers that are listening today, if you have any questions, yell it out, and we'll try to answer them. Join the conversation. This is supposed to be a free-floating live. You have the best reporter of Wall Street news in the world, in Charlie Gasparino. By the way, looking very dapper with your new haircut. I like that. I could use one myself.
And I want to ask you a meta question before we go on here. And sure. It's like, I saw this crazy chart that looked at the Magnificent Seven since 2019, which showed this amazing green line up, and everything else since 2019, I guess it was the rest of the S&P, down. How is that a functioning market?
Well, it's when there's so much capital behind a new technology, and these 7 stocks are 37% of an index, you can see where that could happen.
So this is not like, these are not, I mean, obviously the S&P is not, we're not talking about companies going bankrupt. We're not in the Great Depression. We're just talking about an allocation of capital away from like Walmart or whatever's in there to the new economy, because they believe the upside on the new economy is so great.
And it's multiple new economies. It is the parallel economy of Nvidia, and down the road, IBM is one of the poised to be one of the absolute great winners in quantum. And we've talked about that in this show. There is a continuum of progress that's being played out through the indices of the stock market. And you can see not only new economies emerging, but new economies emerging. And it's a very dynamic time to be investing in these markets, because you have to have exposure to these 7 stocks on either side. If you're long and or short, you must have exposure to them. And the question is, if you short the market, how do you short the market? Well, we said just short Nvidia, you're shorting the whole market.
By the way, someone named Javier just posted Gasparino is back.
Where'd you go?
I think he was talking about last week. Was it last week when I just took a phone call?
Well, I would have taken that phone call too if it were coming to me. I would have left the show and taken that call for sure. That's why people watch the show, because they get breaking news. And you did break some news at that point.
We did. Let me ask you this: Fed expectations, now a rate cut? Why?
It's a good question. We talked about last week the mid and longer dated bond ETFs and what they were saying. They're still saying higher, longer for inflation. Now, as you know, you know better than anybody because you cover it so closely. Anytime there's a big job audition, there is this TV reality show like saga that goes on. The candidates get trotted out. There's always the floating of names, and then
there's the interview process. The Fed chair. There's a floating of the Fed chair. A lot of people. Bessent, I think, was on CNBC talking about how there's going to be a Fed chair selected before the end of the year, and which would take Powell's place when his term ends next year. A lot of people think it's going to be Kevin Hassett, who's a senior economist inside the White House right now. Kevin, I like Kevin. I know him a little bit, but he seems to suggest, and maybe this doesn't matter anymore. The Fed was always, independent, right? He clearly says he's working for Trump. I mean, if you listen to what he said recently,
Well,
you know,
maybe that's why markets
good?
rallied, right? They're saying, look, you know, there's easier money. And I always think the job of the Fed is to keep money moving. So you keep the velocity going and keep the lubrication of the economy going so it doesn't break down. That's really the Fed's job.
Well,
Yeah,
we do have a breakdown in the economy in a weird way. Not a breakdown, but let's say divergence in the economy. We have these great markets that if you're in the indexes, they're going nuts. Everything AI is still going up. If you're on Main Street, I mean, by every, you know, okay, you know, I've listened to Howard Lutnick and other people sitting around talking about how, oh, it's, you know, people don't understand how great it is. They don't. It was sounding like Biden, but when Harris was running, you don't understand how great it is. Inflation's not so bad. I mean, the average person is giving Donald Trump extremely low marks on handling of the economy. I mean, his approval ratings are in the dump because the Main Street economy is still not kicking it. And yeah, the markets are pricing in something maybe, or maybe just, you know, AI is just it, and there's some weird divergence here. I will say this, Bob, if you have already inflated asset prices and inflated food prices and everything else, and you have about 2% inflation, it gets ticked up to 3 because that's where we kind of are right now. Man, that's a recipe for problems, you know, in with the
well,
Main
they
Street.
need housing, right? And so,
It's not just housing; it's all this.
yeah, but it is because mortgage rates are high. And if mortgage rates are high, housing and cars
mortgage
drive
rates.
the economy.
Yeah, but wait a second. Mortgage rates have nothing to do with the Fed. The mortgage rates are pegged off the 10-year, and the 10-year is pegged off of inflation.
Yeah,
I'm
but
just,
how many people out there have shorter term morgages that are not pegged off the 10-year? And that
and
would be an
there's
interesting
some, but
stat
I
for
mean,
you to
like, if you want a
check
30-year
out.
mortgage,
It's a lot more than you might think, right?
I just wonder if we are talking about some weird situation here where the tariffs really threw. I still hold the tariffs are a wicked, unforced error. The Trump economy, and the Trump one. If you look at Trump one, the economy, what was great about it is you did have wage growth. You had low inflation and wage growth. He laid off the wicked amounts of tariffs. I mean, he had some, but it wasn't what he did on Liberation Day, which he backed off. Let's be real clear. He didn't just go through with it. He backed off, but it's still there, and it seemed like it was like just a ridiculous exercise in almost nothing because I don't know how much we really got out of it. And now we're kind of stuck in this area where people are like looking at their paycheck and saying, well, wages aren't going up, which that did come out in the last report. Hiring is getting soft. Inflation is still sticky at 3. Prices are still elevated. What do I do? I mean, I really think that this is an interesting story. It's maybe not totally our story because we focus on how to make people money in the markets, but there is something weird culturally going on here, which I think it kind of began with Obama, where you saw the divergence between Main Street and Wall Street, where money printing and QE and fiscal stimulus, diverged the two. Rich got richer, poor got poor, or middle class people lost ground. Trump one kind of brought it together because he had those pro-growth policies. Biden, again, separated out because of stimulus, fiscally and monetarily. And this weird thing that Trump did with tariffs kind of exacerbated that. I guess we're going to have to see.
You had 5% T-bills, right, which was a tremendous gift, right, by Yellen. There's no question about that.
Oh,
and
yeah.
then you have tariffs. And we've talked about it on this show. Tariffs are nothing but a VAT in disguise, in my view. And
absolutely
something has to be done about the deficit. We're spending too much money, but no one can stop spending too much money. And I think one of the more interesting things is that Doge does not exist. It went out of existence.
Didn't they push
no
back?
No one covered.
Didn't they push back on that report?
Okay, how hard?
Yeah, you're true.
Not that hard. It was more or less kind of out of existence, right? So I don't know.
All right, we got a question here. I might as well toot my own horn here. Charlie is the man. I remember when he broke many of the news around 2008-9 financial crisis. live bomb, like the bombshell Merrill Lynch CEO Stan O'Neill privately conceding he's probably out of a job. Yes, I remember those days. Those beautiful, it was bad news, and you went home at night as a reporter, and you were thinking bread lines. Thinking back, my old man grew up in the Depression. So it was kind of like, as a reporter, you like chasing the story, but then you start digesting the story, and it was no fun, in some respects.
As a reporter, do you ever say, this story is too big? It's too big for me to cover.
No. The only
Never.
way I would back off of a story is if you told me it was national security implications. I'm not going to, do something that leads troops to die. I mean, I guess the question was, there's several stories out there about the Pentagon Papers, Bob. There's a movie out there with Meryl Streep and Tom Hanks playing Meryl Streep playing Katharine Graham of the Washington Post, Tom Hanks playing Ben Bradley, and they broke the Times broke the initial Pentagon Papers story, but they broke the follow-on, which was even bigger in many respects, and it's a great movie. And they were going public on they said it was funny, the story. The movie says they were going public on an American stock exchange. They went public on the New York. I remember Dick Grasso, old friend of mine, ran the New York Stock Exchange back in the day. Actually, was part of the listing of the Washington Post back then. There was a worry that if they published these Pentagon Papers, Nixon sued, it would screw up the IPO. And they went forward publishing it because it wasn't going to jeopardize the American troops. It might even bring them home. If they published it and it jeopardized, I don't think they would have done it. Katharine Graham would not have done it. I actually knew Katharine Graham's son a little bit, Don Graham Jr., because I worked at Newsweek, which was owned by a Washington Post company. I met him once or twice. A very good guy. By the way, what a guy with a lot of power who worked as a Washington cop for a time. I mean, this was a real family, a real interesting family. In any event, I think that's where you draw the line. Someone once asked me, and he lied to me. It was a PR guy that worked for Steve Mnuchin when he's Treasury Secretary. He asked me not to publish a story about where he was going to be at some time, and I said, okay, you're going to give me the story when it's okay? Yes. And then someone else just did the story, and he impressed upon me not to do it because he didn't want to there was some worry about the Treasury Secretary's safety, essentially. And I said, okay, but again, even in that respect, he had no problem leaking it to somebody else. You know what I'm saying? Right. But I err on the side of that. I think a lot of this stuff with the financial crisis, which you had to worry about, is where bailing. It was funny. Like we were getting, because there was so much investor interest and playing both the long and the short side. The companies like Merrill Lynch and all these companies, AIG would say, "Oh, Charlie Gasparino and CNBC were stoking the uncertainty and the problems with the banking sector unfairly and leading to a run on the bank." The shorts, there were so many shorts in this, and these were major players. I mean, I'm not saying Stan Druckenmiller called me up and said this because he didn't, but they're players like Stan Druckenmiller, like all the big short guys were all short, thinking that CNBC was out there just kind of not being hard enough. So we had that type of tension was kind of interesting to go through. And I just remember telling Jonathan Wald, who's my boss, he goes, well, how are you going to deal with this tension? Or he didn't ask me that directly, but it came up. And I said, just cover this like baseball. I mean, the way I look at it is it's the third inning. Here's what we're going to report today. Here's what we'll report tomorrow. Just follow the bouncing ball. And if the news is real, you go for it. And I never cared after that. And, I'm still here.
Yeah, we're still here.
Doing it.
So one of the things I just to your note about the battle for information in markets.
Right. And you're right. Let's be clear. S3 is right in the middle of that battle. That's you are.
Oh, we are. No, we are. We totally are. We're calling balls and strikes, and sometimes, but we very rarely, almost never, does someone come up and say, your data is not right. This is wrong because, or your interpretation of events is wrong because. I'm not saying it doesn't happen, but it happens rarely because over time we've just perfected our craft and the science of making these estimations on a daily basis to where, major investors can rely on them, and hopefully the public too. It gets informed about what's happening on both the long and the short side. But one of the things that, just getting back to Nvidia for a second, they wrote a rather long report to Michael Burry, right? Michael Burry, closed his fund, but he opened up a Substack.
By the way, one of the big shorts, right?
One of the big shorts, and they went through this. It was like a 20-page deck about how his thesis about depreciation was wrong. And to your point, no one would have thought about it for another 15 minutes. You're the biggest company in the world. And because somebody has a negative thesis about your company, you issue this 25-page report. It's kind of crazy, but they did. So that type of behavior, it just seems companies never really learn. You could
take
ignore your lumps and you move on, and you just go about your business.
You could ignore it, but when you're in the crosshairs, it gets hard. I mean, I remember just AIG, Merrill Lynch, that they ignored the Bear
Charlie, the stock is up how many thousands of percent and making how many billions of dollars. This is not insolvency or bankruptcy or the financial
No, you're right.
system.
And they're not sitting.
This is way different.
I know. You're not sitting on toxic assets.
Yeah, right? You're not sitting on these toxic assets. You're not worried about sludging up the entire system. It was just unnecessary, in my view. But it was interesting behavior on behalf of the company.
Why do you think they did it?
To your point, they're so important. Everybody owns it. We do a show on Nvidia and 160,000 people show up. Everybody owns that stock. Period.
Everybody. Right? Trust me.
Everybody owns that stock. So therefore, they understand their own importance. And maybe they just got a little irritated with this, comparatively, even though Michael Burry is certainly a respected market practitioner, they got the mosquito was flying around. They wanted to hammer it, and that's what they tried to do.
Let me ask you this: did it work?
No, because the stories is moved on. It breathed life and oxygen into a story that was dying down.
Yeah, I think if you don't
hint to Nvidia, watch our show. You won't do it if you use our data. Use our data. Believe me. You'll understand exactly what's happening in the marketplace.
Remember that?
No one's actually anti you.
Do you remember when Michael Corleone goes to Tom Hagen and Godfather 2 and says, our friend and former business partner Hyman Roth is back in the news, and then someone says he's going to be in the airport, and then he goes, "That's where I want him met," and then Tom says, "Michael, it's like he's going to be surrounded. It's impossible. He's surrounded by Secret Service, FBI. Is it worth it? And is he strong enough?" And he goes, and then the conversation switches. But it kind of reminds me of this. They actually did try to kill him. They actually killed him, right?
By the way, you must be reading. You must be reading Dan Loeb, because he says today that most difficult business decisions can be solved by watching either Godfather Part 1 or 2 or reading the Talmud. Okay. So he's like, that's how we do it. So his rule applies.
So is he saying that Jews and Italians have the secret sauce of business?
I would say they're very similar, except one has better food than the other.
Well, I wouldn't go that far. As we do have a. I mean, that's kind of risk and return here. The Godfather exactly. and the Talmud. You are a Talmud scholar, though. You wasn't that your?
Well, I don't want to mix and match here. So we'll just say we'll stick to our knitting. We're very good at data. We won't get the other stuff involved in this conversation.
I can't quote the Godfather, but they did kill Hyman Roth. They met him at the airport when Michael said, "Isn't there one thing we've learned throughout history, that anybody can be killed?
Anybody can be killed."
I mean, It's like his whole life.
No, I think it's you can get to anyone.
You can get to anyone, but his whole life came down to that. that, you know, this was a guy that started out with great promise and virtue and you know, he wanted to make the Corleone family legitimate in 10 years or whatever it was, 7 years. And his whole life was boiled down to, we can kill anybody.
Yeah. That's why it's a great
Scary.
movie.
It's
It's just so Shakespearean, right? It's just so.
I mean,
essence,
right? It's not. God, we could go in a lot of directions with this conversation, Bob. But you have some more stuff. Europe, what's going on there? Asia.
You know what? We're going to talk about one of the picks last week. Walmart is obviously one of the largest retail chains. We called it up last week, and the price was up 7% the day after earnings. This was on our podcast. One of the things we want to talk about is Bitcoin ETFs. It's probably the most speculative asset out there.
You know, I haven't followed them lately. I mean, what's going on?
Well, look at the chart.
Ooh.
So what you've seen is a classic pattern. The classic pattern. Shorts have, you know, there's a classic trading range pattern here for these Bitcoin ETFs. And what we did is that we combined a lot of the biggest Bitcoin ETFs into a customized index of sorts. We see, you know, at the top you have the short interest, and at the bottom you have the price of Bitcoin. And you can see basically people would short into the rally of the price, and then they'd wait and try to buy on the dip, and then short at the top. It was a range traded strategy. And as long as Bitcoin was between 125,000 and 100,000, you know, it worked. But what's happened is that range trading strategy has broken out on the downside, meaning losses. And now it's a momentum stock to the downside. You know, the stock, the Bitcoin's about 85,000. So, you know, this Bitcoin ETF is a classic pattern: shorts, rallying, you know, shorting into the top, and then trying to buy, and then buying the dip, covering, then buying the dip, and that's over. So we're seeing something really interesting, which is a lot of momentum on the downside for Bitcoin.
So you think it's going to go further down, huh?
I think what's happening is that people are getting flushed out. You know, there's a style of trading that is now, that leadership is handing over to something else. And as these folks take losses, particularly if you bought at 120, it's now 85. You'll see some weaker hands flush out. It finds a bottom, and then you get a whole new segment of buyers in.
Now, Ethereum is off 25% the last month.
They all are.
Yeah. So it all kind of goes down. It's interesting that there's no price differential between any of these.
No, it's very correlated, right? I mean, they're all up or down. You know,
XRP down 15%.
The same amount, right? So, you know, that's one thing. That was an interesting thing. And then we got we have Supermicro, which is the ticker is SMCI. And, you know, Supermicro, it builds high performance, energy efficient AI and data center servers and modular components, right? And this is the top battleground stock in the S&P. There's about call it $2 billion at risk on either side. And it's one of the few stocks that have, you know, a $20 billion market cap, where you're seeing short interest is actually a little higher than long interest. There's a big battle going on. So, you know,
what is the battle over? What's driving this thing?
Well, it's a good question. You know, why should you care about this? And it's the market's top AI battleground. It's where heavy, long, and short positioning can trigger an outside move on any AI or macro surprise. So in other words, if there's another chip or technology, and or there's other macro things going on in the sector, you're going to see it shake out, because you've got longs and shorts more or less equal in AI battleground stock.
By the way, I do have a question. This is on my Twitter feed. Are you aware that JP Morgan just filed structured notes tied to BlackRock's Bitcoin ETF? Can someone explain this? I can't. You might be able to, Bob.
Structured notes on
tied to BlackRock's Bitcoin ETF.
Structured note is a way of trying. You get limited upside for protected downside, and they more or less act like something of a bond. So if the stock goes up, you make a limited return, but you're supposedly capped out on the downside too. So depending on how the ETF actually plays out.
So what is this? This is like a hedging strategy and stuff like that?
No, it's an income play.
Okay.
You get, the note has a coupon and you get upside if the stock acts in a particular way. And they can be structured in any different way. They can be structured for more upside. They can be structured where you get maybe a higher coupon, but you suffer more downside. There's a lot of flexibility for folks to get these customized products. I would just say buyer beware of structured notes.
And because
not that they're bad. No, not that they're bad. Just do the homework, understand what your true risk is.
What you're getting into, obviously.
Yes.
All right. So that was someone named Positive Carry 88 that asked me that question, just so you know.
Well, it's a good question from Positive Carry 88 because that's a positive carry question.
This week, what should we be watching? I guess next week, where you and I are gonna eat a little Thanksgiving turkey.
Yeah, we're gonna eat a little turkey tomorrow, and we got one more stock, which is Campbell Soup. Now, this to me, this is the new Cracker Barrel, right?
Campbell Soup. What, they had botulism or something? What was the problem?
No, this is an interesting.
Right, I'm sorry. I said
it's a good story. So one of the technologists goes in for an interview. I think he was getting laid off or he had a beef with management, and he starts recording some of the managers talking about the ingredients that are in Campbell Soup or the lack of natural ingredients that are in Campbell Soup.
I haven't.
And he says basically, I'm not going to eat chicken that's made by a 3D printer on tape. And now, then the market kind of went crazy with, we got 3D printer chicken in our Campbell Soup. I mean, I love the tomato and rice, but everything is bioengineered now, which means you use a cell to create the products.
By the way, if you buy Campbell Soup, you don't think that's processed? I mean,
of course it is.
It's like, oh yeah, I think that's homemade.
But it also, yeah. So, but there was also
No, but he said something really nasty. What did he say?
He said something really bad, which is, this is poor people's food.
Is that shit for poor people?
Yeah. It's poor people's food, which, you have covered.
Which I ate when I was a kid. So I guess we were kind of poorish,
I did too. Who didn't eat Campbell Soup? Everybody loved Campbell Soup. I don't know. I can't say I would love it today, but certainly as a young adult, watching the pennies. Yeah.
Absolutely.
Campbell Soup. So this guy goes out there and has this diatribe against people that are buying cheaper food and then attacks the ingredients of his own company. And what's funny is that the share price was actually flat this week. You figure after a media debacle like that, no soup for you, basically, you would get a pretty sharp downturn. And actually, the stock is flat because this is such a defensive stock. So, short interest is 17% of the float. The stock's down 26% year to date. But this week,
today was
not
down
so bad.
It's been down.
Not so bad.
It's been down. It would
flat.
It's been since the controversy. It's gone from it's about flat. You're right, 31 to 30.
Unless something happened in the last hour. I haven't looked at in the last hour. So
no. I would say this, Bob. Here's what's interesting about this story is that Campbell Soup is an inflation play. And
it is an inflation play.
I think, one of the problems that Trump has with lowering interest rates is, once again, we still face inflation. And, and when you're facing inflation, and here's the sort of why poor people get so screwed with inflation. I mean, it's a tax on actually working class people, tax on people that are not on assistance, that wages are getting eroded by price increases. You do, on top of that, you have to buy cheap stuff, including Campbell Soup,
Well, cheaper stuff,
which isn't the best for you. And
No.
and I will say that's probably the betting in the market, but it's why inflation is so bad. It's actually a sort of condemnation on inflation. I think.
No, it's a defensive stock. It's exactly right.
By the way, we got
Um,
another one. Somebody is saying Skyline ETF, ETH, markets move fast, but narratives move faster. I'm not sure what he means. You know what that means?
maybe we could get a follow-up, a little
Speculation,
amplification of the question.
bullshit on Twitter moves faster than markets. I guess maybe that's it.
I have a
It's
question
kind of
for you
true.
about coming back to AI. I want to unpack this with you. Everyone says we need more power and we need better infrastructure to
Heard
meet the
that.
demand. That is
Heard
certainly
that.
the narrative that, speaking of narratives, right? And yet the cheapest way to do this would be nuclear. But people don't want to live next to nuclear, right?
We will be going into nuclear soon, but things are going to have to get really bad.
So President Trump is always touting the strength of our nuclear submarine fleet. He says it goes anywhere. It's amazing what we can do with these submarines. We have many, many, many nuclear subs in many, many, many sea stations around the country. We have sailors that live within 5 to 10 feet proximity, 6 months to a year and a half at a time. And they have towns that are built around these stations. It's not a secret where they are in the country. And yet you have already towns living with nuclear submarines run by the Navy. And yet we won't let civil engineers build nuclear power across the country. So if it's in a sub, but I can't see it underwater, I'm okay living in a town. And these are big towns. These are not small towns.
I know, it's ridiculous. Remember
it's a little crazy, right?
Was it Groton, Connecticut that had it?
Groton, and there's towns on the West Coast and so on.
I knew someone that grew up there.
Towns on the West Coast that have almost any major port, I would imagine, has we know where these folks are stationed. It just seems to me that if we can trust the Navy with these nuclear subs, what does it say about the population and our trust of civilian controlled? And maybe we give the Navy more leeway to build things for civilian use, because it's obvious people trust that if you can live near these subs and be totally safe. No one is not buying a home in Groton, Connecticut because of the nuclear submarines. I think that's a thesis that people need to unpack.
Well, it's funny you mentioned that. My father was an iron worker. He worked on Indian Point. We lived, I want to say, like 5 miles from Indian Point.
Right.
It's in a town called Verplank outside of Peekskill, New York. I grew up in Yorktown Heights, right there. And my dad, I remember he actually got Geiger counter readers, because you know what you do when you build these plants, you put the nuclear thing in there. I think that you house the nuclear, I guess not the waste, but the power generating. There's nuclear power in there first before they start, and then you build the dome around it, which is very thick concrete. My dad was an iron worker. He put in the iron. And people live, they still live, they lived there for generations. I don't remember people saying, oh, my house costs less because I live near nuclear Indian Point. It never really was, By the way, there was this pond, as I remember, near the plant that was, it was runoff from the Hudson River, because it's right on the Hudson River. That was really clear and really warm. And I remember, I never swam it. I remember people used to swim in there because it was really clear and really warm. I dodged that bullet, by the way.
Well, what do you got for us this week? What's Gaspo's headlines?
Well, one of my stories is still like bouncing around the internet in a major way. By the way, Positive Carry just tweeted out, tune in for some interesting perspectives from Charlie and Bob on the Nvidia Bitcoin ETF. Good. Thank you,
Thank
Positive
you,
Carry.
Positive
We
Carry.
appreciate that. Okay, so one major story I did this week is involving Netflix making a huge move to try to buy Warner Bros. Discovery. A lot of people think that the Paramount Skydance deal is number one. It's in the pole position, which it is because Paramount Skydance is run by the Ellisons, and Larry Ellison, co-founder of Oracle, is best buds with Trump. Trump would love to have Warner Brothers Discovery, the whole company, including CNN, right, in Larry Ellison's hand to make it more MAGA. But for we understand what sources are telling me is that Netflix is ramping up a major charm offensive with Warner Brothers and U.S. regulators, basically telling the board that its bid could survive an antitrust challenge. There's really no antitrust concern in its bid, particularly because you're merging two streaming networks. Now, work with me here, Bob. You would think the number one, which is Netflix streamer, the number three, which is Warner Brothers Discovery streamer, that would be an antitrust issue. But what they're saying is, nah, antitrust does not necessarily apply to streaming. There's something called category ambiguity. This is something that I went back and found. John Malone, who is on the board of Warner Bros. Discovery, very close to Warner Bros. Discovery CEO David Zaslav, has been talking about. It's a theory that antitrust law doesn't necessarily apply to streaming because of the prevalence of content on YouTube and social media. And I heard they made headway in convincing the Warner Bros. Board that is the case. So even though it looks like Paramount should, it has that glide path to get regulatory approval, WBD is saying the board is starting to like Netflix's offer here, and so they're making a push. We'll see. By the way, Bob, one of the problems with this story, I'm glad we're going live with this today, is that this story changes minute by minute. I mean, this is going to probably be, there's going to be another round of bidding, I think, on the first. When is the first? Is the first next Monday? I can't remember.
Well, this is one of the things that I find.
But the second round of bidding is the first. I think that's Monday. I could be wrong. But what I'm saying is that Comcast is going to be in it. Yeah, Monday is the first, Bob. So December 1st is the second round bids are due. Comcast, from what I understand, is going to bid on it. So stay tuned.
This is why people are nervous, right? Because you have today, Nvidia is no longer the market leader. You now have more or less an oligopoly, right? You have Google and the other stocks are now taking over market leadership. At the same time, you have in media this huge consolidation play. And so you have the content, the delivery mechanisms, and the future all competing for position at the same time. It's happening on many different chessboards across the marketplace. And I think that's why you're getting people feeling uneasy. There's just a lot of recombinations, new technology, and quite frankly, everybody's just starting to understand AI, what it means, how to use it. Use it poorly, it does one thing. Use it fantastically well, it means another. So the use and the usage, both at risk, meaning you have to educate yourself, and then usage and compute and power needs to be there, and then the content needs to be delivered through. So horizontally and vertically, everything's in play.
Well, I would say this for our viewers who are looking to play the stock. I'm just going to lay out some factoids. I'm not telling you what to do. The general feeling is that they're going to get the bids up to about $28 a share. It's not going to hit 30. Zaslav wants $30 a share. That would be a $70+ billion deal. But 28, 27, 28 is pretty damn good, considering Warner Brothers Discovery stock was trading at 12 before this happened. We should point out this story began two ways. Number one, the Journal broke that we were right behind it, but they did have it first, that Ellison was going to make a bid for Warner Bros. Discovery. I came back literally the next day and said there's going to be a bidding war, and that Netflix, Comcast, you name it, that was what we do have now is a bidding war. I think that the general feeling is that they're going to get those bids up to $27 27.28. So it's trading at 23. I don't tell you what to do because you never know. I'm not in the boardroom. You know, there is always a possibility that David Zaslav, who runs Warner Bros. Discovery, says, "Nah, don't want to do it.
Yeah,
You know,
Right.
we're gonna break up the company and we're gonna sell it in pieces and we'll make more money over the long term. The stock will drop at that point." There is always a possibility that Comcast, which may have to bid up, says, "Now, Trump hates us too much. Trump does hate Comcast. Remember, it was, MSNBC is a Comcast property. They're spinning it off, but he doesn't forget all the negative shit that Rachel Maddow said about him. Netflix doesn't do a lot of big deals. They hate the regulatory scrutiny, so they may go through with this. They look like they're spending a lot of time. They got a big time lawyer, a guy named Ken Sunshine, who's running around just really pressing the flesh and pushing that this regulatory ambiguity thing. But then Ted Sarandos might say, and Reed Hastings might say, you know what, we grew and we didn't have to deal with all these regulators over the years. So let's just walk away. So remember, that could deflate those bids immediately. I can tell you that the people at Paramount Skydance with the strongest hand believe they don't have to bid as high as 27, 28, maybe 27, but just, they don't, they may go there. I'm not saying they won't, but they feel because of their regulatory glide path, Trump is friends with Larry Ellison, they can get there. So that's kind of where it is, guys. You pick your poison, do what you want to do. I will tell you that. Go ahead, Bob.
No, I was going to say let's change the topic for 1 second. Any Mamdani updates?
Well, if you notice,
I love the fact, you know what I love more than anything? What's the first thing the city council does? They give themselves a raise.
Yeah, I know.
Right? I mean, so it just proves
he needs to help.
All these folks are capitalists. No, all these folks are capitalists. They're just not very good at it.
They're not capitalists.
Right? The bad ones are there.
They're a combination of, remember, socialists, the old Russian Politburo, I'm sure, paid themselves pretty well back in the day.
Pretty well.
I will say this. So Mamdani did meet with Trump, as you know. I did an interesting story on the backstory to it. Here's how it kind of went down. There's a New York City businessman, I'm not going to say his name, spoke to me no one will figure out who it is. This guy's so underground. But he's very, very tight with Trump. He's also big in New York City politics for reasons that I'm not going to get into because then it'll point to him. An associate of Mamdani reached out to him because he knows the guy. And he said, listen, Zoran wants to meet with the president. The conditions were, I'll make this happen. But he can't go in there guns blazing. He's got to be nice to him. And the guy talked to Trump and basically said, listen, he wants to meet. Why don't you just meet with him? He was elected mayor, give him a shot. If he fucks it up, just lower the boom. And he's got a lot of firepower. People forget New York City has a law. It's called it operates under something known as the Financial Emergency Act of 1975, which mandates, this is after the fiscal crisis in the mid-'70s where the city almost went bankrupt. It mandates that you have to have a balanced budget at the end of the year according to GAAP, not the bullshit they do in these state governments where, count this, count that, finger in the wind. You have to literally do it by accounting, generally accepted accounting principles, GAAP. So Zoran Mamdani is going to have to balance the budget, or the state kind of comes in, this control board comes in, which he does have a representative on it, but it's run by the governor essentially and the city controller, where they come in and they kind of take over the city's budget. So if he plays around too much here, it's just so many taxes you can raise. In any event, he needs Trump. The city gets $7 billion of yearly aid from the federal government. Trump starts, throttling that. He's in big trouble. He already faces a budget gap in the next fiscal year, which I think begins in June. You got to check me on that, of something like $8 billion. If he imposes all the stuff he wants, which he can't get it all, but if he does, it goes up to like as much as $17 billion. You can't raise taxes out of that. I mean, it's so easy just to leave the state, right? And so my view is, my point is, he needs Trump. Trump knows he needs him. Trump may use that as a lever to basically tamp down on the crazy shit. And that's kind of where we are right now. Now, on the other hand, Mamdani made some appointments to his cabinet that I read Dan Lowe's. What he called them, like communists or something. I can't remember what he said. It was funny. But yeah, I mean, he's not like exactly, appointing Larry Kudlow types to the administration.
It's something like, third rate, second tier. I mean, it was
third rate, second tier commies.
something.
Something like that. But and that was my story. That's Trump did. There was a love fest. It was bizarre, by the way. I think everybody's gonna love him. I found this was like two minutes ago. He was calling him like a communist lunatic. That was the word, communist lunatic, the term. So anyway, there was method behind Trump's madness on Mamdani. So stay tuned on that one. I think that's it for us today, Bob.
I think that's it. Have a happy Thanksgiving, Charlie.
Happy Thanksgiving. We'll see each other next week with another, and you all. We'll see you all next week with another live edition of Risk and Return. My name is Charlie Gasparino from Fox Business and the New York Post. I'm with Bob Sloan. We're here every week. We're going live, and we're here to make your life a little easier in the markets.